Hi, this is Zach Mayer with the Bulletin Board Heroes here at Zach's Traders Cafe for Tuesday, the 19th of November. Starting off with the FTSE 100, which has managed to deliver a bull trap through the still rising 200-day moving average there around 81.10. Below that, we've got the risk of testing the floor of that rising trend channel from this time last year, around 80.26, and obviously the even worse risk of testing the August support there, around 79.15. We've had the RSI now below the neutral 50 level for the best part of a month, and multiple failures below that neutral 50 level suggests that this market is looking a little bit heavy, to say the least. If we do break higher, we'll need to have an end-of-day close above that 200-day line to take us up to the October resistance line at 82.60, but at the moment that seems a long way away. Moving on to the DAX, and here you can see that we've also been struggling somewhat at the floor of the rising trend channel there. That was around, and it's still around 18,900, but while we are in the vicinity of that feature, still hoping for a move back to 19,500. So basically holding the post-October range. This market's had 18,900 to 19,500 over the near term. The only problem here in terms of the RSI is that we've had a clear failure there at neutral 50. So that does suggest we've got a rollover and maybe head as low as the old September support, or at least the 200-day moving average at the 18,400 level. Moving on to the Dow, which has not been quite the same since the farmers got kicked by the new health chief in the form of RFK Jr. But here you can see that we're back within that rising trend channel from this time last year. The floor of the channel there, or at least the uptrend line there, from back in August, running through 42,400. Also the level of the 50-day moving average, and that's probably where we're risking this market to go while we're below the top of the channel there at 43,900. RSI still above neutral 50 at 55, so still have a chance that we'll have a rebound either today or tomorrow, etc., etc. Moving on to Bitcoin, which remains the star of the show by some distance now, where we have a mid-move consolidation, the second mid-move consolidation we've had in the recent past. Interestingly enough, the consolidation seems to be at the higher end of that bull flag, which is very encouraging. The old resistance line target there was 88,000, and above that we're now looking for 100,000, hopefully by the end of the year, i.e. by December the 31st, so 6 weeks away. On the downside, hoping that we'll be able to get away with former resistance on the way up, around 81,600 at worst, but this looks like a strong consolidation ready to break higher, maybe with companies like MicroStrategy and others in the mix as well at the moment, giving a bit of extra gloss to this market. Moving on to gold, which had a torrid week or two, but managed to bounce basically with a bear trap rebound from below September support there. That was around 25.75, and so the old 25.60-70 resistance that we had for August and September has kicked in as support for this market. We are now nominally near the floor of that rising trend channel that was broken temporarily from February, and looking for the 50-day moving average around 26.70, even if this market then fades away after that. We bounced off the oversold RSI level, which we haven't done for over a year, so that is actually maybe a healthy sign that we've unwound the overbought situation this market had. Moving along to the stocks, and starting off with Amigo, which is always fun, considering that you never quite know whether it's actually going to be there or not, but it is there at the moment. We've got a rising 50-day line. We've hit our old target there at 0.54, and above that, looking for a target here as high as a penny, which seems almost unbelievable, maybe by the end of the year, while we remain above the recent resistance around the 0.65 pence level on an end-of-day close basis, but looking surprisingly chirpy for a company with that kind of history. Moving on to Avacta, which is perhaps causing a little bit of concern now, where the reason for the concern is that it is possible to draw a falling trend channel there on the daily chart. For the channel there heading for 35 pence, and a break of that uptrend line there from June. The lowest level that is around the 44 pence level. So below 44 pence, we got the risk of a move down to 35 pence over the next 2 to 4 weeks. The other negative at the moment is we haven't had the RSI back above neutral 50 for a number of weeks now, nearly a month, and we've had 2 clear failures of the RSI below neutral 50, so this is looking a little bit soggy unless we get a quick turnaround back above the late October support there at 47 pence. But the overall drift with the 200 and the 50-day moving averages both falling also gives this a weak look. On to Eco Buildings, where it looks like a big order is potentially in place here. A rather weird chart that we gapped up at the beginning of this month and then fell to new lows, but gapping up again today and then finding resistance at the old support there around 8 3/4 pence. Want to see an end of day close above that to give the shares a chance of moving up to the 200-day moving average and 11 pence. As you can see, the recent history of the stock has not been that exciting, or bright at least. Also not so bright has been Greatland Gold, but a little sign of recovery now. Just when you thought it was going to be back below 5 pence, or the possibility of being back below 5 pence was there. Here we bounced back up to the towards the 50-day moving average level. You can see there's the main line of resistance there from back in December last year at 6.4 pence. So if you're cautious, you're probably waiting for that to break before targeting back up to 7.5 pence, basically post-summer resistance for the shares. But what we don't really want to see is another move or another test of the 5 pence area at Greatland. On to one of the technical charting successes of the recent past, which is GSTechnologies, presumably helped by the backdrop in all things digital. We had an unfilled gap to the upside in October. We hit our initial target there at a penny at the beginning of November, and second target there, which was rather optimistic, 1.5 pence, has already also been hit today right on the nose, which means that we are allowed to look for a fresh target here, which would be up towards the 2 pence level by the end of next month. That's a resistance line projection from the spring of last year. Ideally, we stay above the floor of the gap at the moment at around 1.25 pence. Moving on to Hemogenics, where we have bounced well over the recent past. Shares were still basically in a range between a penny and 2 pence, but got a rising 50-day line above that at 1.4 pence, looking for a retest of 2 pence over the next 2 to 4 weeks, hopefully a bit sooner than that. Moving along to a less high-profile situation, which is Ixico, but interesting looking chart. We've hit our first target at the top of the rising trend channel base at 10.25 pence. Above that, looking for 15 pence. Hopefully by the end of next month or even sooner. There's a gap to fill there around the 12.25 pence level in the meantime. Quite a journey at Sareum, and quite a nightmare, I suppose, most of the time, but having another go at breaking higher here with a kind of rising trend channel base. RSI is also pushed above neutral 50, and so and the 50-day moving average. So looking for around 33 pence, hopefully over the next couple of weeks, maybe by the end of this month, while we remain above the floor of the channel there at 24 pence. Thought I'd take a look at Thor Explorations, because it's had 1 or 2 bumps in the road of late on the fundamental basis, but rising trend channel rebound and bouncing off the 200-day moving average at 14.8 pence. Looking for 20 pence, hopefully, by the end of the year. And finishing off with stock which has been quite a difficult customer over the recent past. You can see that the trend has not exactly been great here, but double gaps higher over the course of this week, yesterday and today. And if we can break that line of resistance there at 2.1 pence, we could be looking for up to 2 3/4 pence by the end of next month. Ideally, we stay on the right side of the low yesterday, around a penny and a half. That's it for me today. More updates tomorrow.